Hello everyone. Welcome to Mirae Asset Sharekhan's quarterly sectoral preview. In this episode, we will look at what's in store for the metals and mining sector in Q1 FY27 and what are the key takeaways for investors. Let's begin with the quick snapshot. Cyclical recovery kickoff. India's metals and mining sector is entering a cyclical earnings recovery in FY27, supported by the improving industry fundamentals and robust domestic demand trends. Top-line surge ahead, our coverage universe is expected to report robust revenue growth for around 18% year-on-year, aided by the better volumes and strong global realizations. Steady margin growth. Overall EBITDA is projected to be witnessed a steady increase of around 5% year-on-year despite the persistent raw material and the energy cost pressures. Segment divergence. Ferrous growth will be led by resilient local infrastructural demand, while non-ferrous players will deliver a strong profitability driven by the favorable commodity prices. For our coverage universe, revenues are likely to rise around 18% year-on-year in Q1 FY27, led by better volumes and strong realizations, alongside a steady EBITDA increase of around 5% year-on-year. However, profitability growth could be slower in selected pockets owing to lower volumes in specific segments and persistent cost pressures from elevated scrap and energy prices. Ferrous volumes are likely to remain flattish for Q1 FY27. Sluggish exports due to global oversupply from China, mixed coking coal output from monsoons, and planned maintenance shutdowns are temporarily slow down the momentum. However, domestic finished steel consumptions increased a healthy 8.3% year-on-year to 41.6 metric tons, supported heavily by infrastructural demand. While key raw material prices like coking coal stay elevated, normalizing global shipping rates will soften the cost curve, allowing improving steel realizations to offset input cost. Government anti-dumping probes on hot-rolled steel imports also remain a structural positive. Non-ferrous companies are projected to report excellent results on the back of stellar realizations. Aluminium ingot prices in Mumbai surged around 50% year-on-year to 3,67,590 per ton in June 2026, while copper cathode prices jumped 49.4% year-on-year to 13,18,140 per ton. While average aluminium prices are projected to ease slightly to 3,000 per ton, as geopolitical premium cool, deficit fears are predicted to jump zinc, nickel, and copper prices by around 4 to 7% quarter-on-quarter, strong supporting earning growth. With these factors in place, here are our outlook and valuation of the sector. The metals and mining sector remains well placed for the constructive recovery. We expect stable growth in ferrous segments backed by domestic capex, while non-ferrous companies will report robust profitability for the quarter, principally driven by excellent global realizations. In a nutshell, our view on this sector is positive. Key risks include persistent import pressure, high coking coal cost, and any sharp drop in global base metal prices. Leading the sectors are our top preferred picks: Welspun Corp, JSW Steel, Gravita India, NMDC, and Coal India, all which carry a buy rating. Lagging behind, however, Moil and Ratnamani Metals, which are expected to be a quarter's laggards. That wraps up a Q1 FY27 result preview for the metals and mining sector. Are you bullish on Tata Steel and JSW? Or do you think non-ferrous players like Hindalco are the better bet right now? What are your views on the same? Share them in the comment section. You can now access our in-depth records for metals and other sectors on real-time basis by joining the WhatsApp channel for the Mirae Asset Sharekhan Research Center. The link is in description. Explore research calls and detailed reports across equity, F&O, commodities, ETFs, and more. Visit research.sharekhan.com to kickstart your wealth creation journey, backed by our research experts. Thank you for watching. Stay tuned for our quarterly results previews for other sectors.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.